You may be aware that Russia is engaged in conflicts on the battlefield with Ukraine. However, this conflict extends beyond mere military engagement. Russia is also grappling with significant financial challenges. Despite the focus on the kinetic warfare in Ukraine, Russia's financial struggles often go unnoticed. So, what's happening to Russia, and how did they get themselves into this crisis? For the past 8 years, Russia had been accumulating money in a fund called Fortress Russia, totaling a significant sum of $643.2 billion. Moscow had a strategy for the war. They intended to use a special fund to finance it while continuing to sell oil to generate more revenue. However, the West intervened and prevented Russia from accessing half of the fund. Then, in September, Russia halted oil sales. While some might speculate, this move was to exert pressure on the West, just like their reduction of gas shipments to Germany via the Nord Stream pipeline. The primary reason why Russia stopped selling oil was because of their need for fuel. As you may already know, Russia has imposed a ban on gasoline and diesel exports to all countries except Belarus, Kazakhstan, Armenia, and Kyrgyzstan, which are part of its Eurasian Economic Union, which is like their own version of the European Union. This decision traces back to former Ukrainian President Viktor Yanukovych's last-minute attempt to have Ukraine join this union, which sparked the Maidan Revolution and subsequent events. Since Western countries had already imposed sanctions on Russian oil, the ban primarily affected countries like Brazil, Turkey, India, China, and Saudi Arabia, which had stepped in to cover Russia's supply surplus. Saudi Arabia, despite being a major oil exporter, found itself in need of importing oil due to economic sanctions and strategic business decisions. While Saudi Arabia produces more oil than any other country, it also utilizes a portion of it domestically to maintain stability and satisfy its citizens. However, when Russian Urals oil is priced significantly lower compared to Brent crude, as much as a $30 discount, it becomes financially beneficial for Saudi Arabia to import oil from Russia, use it domestically, and sell the surplus at a higher price. Although Western sanctions are aware of this practice, they tolerate it as long as the additional profits do not flow back to Russia. Now, you might think that with Russia not selling oil, then they must be living abundantly. However, that's totally wrong. Russian citizens are facing high gas prices. From a basic understanding of sanctions, this might seem puzzling. Europe stopped buying Russian oil, so it's no longer going there. The few international buyers who still want Russian oil are willing to pay much less for it, so you'd expect there to be plenty of cheap oil available within Russia, and Russians, who may not view it as a political issue like the rest of the world, would happily buy it up. So, why hasn't that happened? When Russia invaded, the West imposed numerous sanctions. While much attention focused on the military aspect, these sanctions also disrupted everyday life in Russia. Supply chains, especially for domestically produced goods reliant on Western components, were severely affected. Consequently, items previously readily available to Russians vanished from store shelves. On a broader scale, while there was still an abundance of rubles, the availability of goods dwindled, leading to a situation where the Russian ruble lost value, causing inflation. The situation worsened at the onset of the conflict, when Russians feared their currency would become worthless. This prompted a rush to banks, with people either seeking to exchange their rubles for more stable currencies or purchase goods before prices soared further. This surge in demand for currency and goods compounded the problem. The ruble's value plummeted due to mass exchanges, while the increased money supply drove prices even higher. The resulting scenario resembled a bank run, with the risk of banks not having enough cash to meet demand, potentially destabilizing the financial system. When the war began on March 10, 2022, the ruble plummeted to just 0.70. Surprisingly, by June 30th, it surged to $1.80, even surpassing its pre-war value. However, this apparent improvement didn't necessarily reflect genuine demand for rubles. Rather, it resulted from temporary strategies aimed at bolstering its value. As the war persisted, these short-term measures evolved into long-term issues, and the ruble began to depreciate. By December 2022, its value had dropped, and by October 2023, it had fallen to $101, representing a 28% decline from its pre-war levels. Although there was a slight improvement in November, with the ruble rising to $1.09, the overall trend indicated a significant devaluation. Two issues that ignite the average citizen's anger to the maximum level are government tampering with retirement programs and surging fuel prices. Putin has first-hand experience with the fury evoked by these matters, particularly evident from the failed 2018 pension reform plan, which sparked significant social unrest in Russia. Additionally, soaring fuel prices hold a central role in Putin's strategies, as seen in the Nord Stream plan aimed at coercing Germany to comply with Russia's annexation plans for Ukraine by threatening them with excessively high natural gas prices. Before the war, there wasn't much sign of people faking support for Putin, but he's limited in making policies that might anger folks, like when they tried to change the pension system, or when lots of men left the country after the September 2022 mobilization. It made a lot of people unhappy. The oil export ban seems like a move by the Kremlin to keep things calm internally and avoid Putin facing opposition. While it helped Ukraine by cutting funding for the war, it also suggests Russians aren't happy about the invasion. In 2023, Ukraine's plan was based on the idea that Russia wouldn't mobilize again. The oil ban supports this idea, showing that most Russians would accept higher transportation costs, but really wouldn't like another round of conscription. So if the Kremlin doesn't want to deal with one problem, it might not want to deal with the other. But the export ban wasn't forever. When winter came and domestic demand fell, Russia focused on funding the war again. So they eased the ban in October, letting companies export diesel again, although they had to pay some fees. These fees, about $4 billion, couldn't be used for the war. So while the export ban didn't last long, it shows how Russia's priorities changed in handling the conflict. Well, that's about it for today's video. Let us know your thoughts and opinions in the comments below. Do consider liking this video and subscribing to the channel while you're at it. Thank you so much for watching, and we'll see you on the next one.